I like to think that I know more about the private companies that we're investing in than what I have in the stock market, to be honest with you. And guess what? I'm losing more money in the stock market than I am in my private. Like I'm on paper, our investments are appreciating by a lot.
We created this podcast with the idea that we were going to create a platform that would help entrepreneurs who maybe come from non-traditional backgrounds, help them get more exposure to their brand, their business, their mission. And so it's been a great ride. Hello and welcome to the Underestimated Podcast Season 2. We are excited about our episode that we have for you guys today. My name is Rodell Razor. I'm the CEO and co-founder of X Factor Capital. I'm joined here with my business partner, Jeremiah. And we got some exciting stuff for you. But before we get started, I always like to thank you guys for lending us your ear. We're excited to share with you guys. If you're into startups, venture capital, investing, and all things entrepreneurship, this podcast is for you. And we also like to thank our wonderful sponsors who make all of this possible.
Yeah, and I'm Jeremiah Captain, like you said, VP of X Factor Capital, and we're excited to have an amazing guest on here, Lenny Saizan. I actually met Lenny through a friend of his named Heath Butler. Shout out to Mercury Fund down there in Houston. He spoke very highly of him. He said he's the guy I had to meet. He's doing some great things in the venture space. And I had the pleasure of meeting one of his actual portfolio companies, Mitch, who's building something super dynamic in the femtech space for apparel. And they all spoke super highly of Lenny. And we finally connected with him earlier or late this spring. And he's been super valuable for us as we build our company out, just learning from, being underestimated, not only founders in the space, but underestimated capital providers. And we just love to have Lenny come on, just share a little bit of who you are, what you do, and why do you do it?
Hey guys, thank you for having me. I appreciate it. And I'm looking forward to the conversation. So my name is Lenny Saizan, Managing Director of Urban Capital Network. To give you a little bit of background about Urban Capital Network, we're an investment firm based in Houston, Texas. And we're a little bit different than a lot of venture capital or investment firms, whereas we focus on investors, specifically minority and underrepresented investors. And we make sure that we get them opportunities and access to invest in venture-backed companies as well as into venture funds. And just to give you a little bit more background on traditional venture capital, typically a venture capital firm to participate in their fund, you have to know someone to get in most of the times. And two, if you know someone, you have to be able to meet their investment minimums, which is usually in the range of $250,000. And that's for family and friends. So beyond that is really closer to $500,000 up to like $5 million for a minimum investment. And that's because they're typically dealing with institutional investors in their funds. So what we do is we get access to their funds and to portfolio companies within those funds as well. And we extend that access to our investor network, and they're able to get in for under $15,000. Now, you still have to be a qualified, accredited investor, but you do not have to come up with $250,000 check to participate. So you can get a venture quality portfolio for under $15,000.
Wow, that's great. So you guys are able to kind of pool the resources and kind of have this convoy approach into allowing investors that have typically been overlooked to get into some of these funds, because we all know it's all about who you know and what they know about you to provide that access, but allow them to participate in some of those deals, because some of the people that are first generation building wealth may not be as liquid as others or want to leverage as much, because we know that this is a very high risk category to invest in. So sometimes those first generation wealth builders or even second generation wealth builders are going to try to be a more secure asset where they can actually, touch, feel, and control it. Where this, you're kind of, really not necessarily betting, right? Because betting means you don't know what you're doing, or gambling is when you don't know what you're doing, but you're making some strategic investments based off of the people you have handling it. So allowing them to get in at a cheaper price, but still be able to kind of feel what that upside can look out, because when it does go up, there's a significant type of growth you can have off of that investment.
Yes, absolutely. So, the country has gone through innovation cycles since the beginning of time, and I think right now it's classified as the sixth wave of the innovation cycle, and each of those innovation cycles generates value and wealth. And unfortunately, the minority communities have not participated in the wealth that's being generated from each of these innovation cycles that we've gone through as a country. And what we want to do is make sure that our communities are participating in this wealth generation. If you notice, some of the most wealth has been created from innovation, and what for us, we usually find out about these opportunities after all of the wealth has been created and extracted. Like, we might find out about an investment opportunity once the company is public. Well, by that time, it has created a tremendous value in the company. And there's a lot of people who generate wealth and get rich off of being able to invest early in those companies. And the way Urban Capital Network came to be formed was that me and my business partners, we were doing some early stage investing as angel investors. So we were investing in a couple of companies at the earliest stage, pre-revenue, what we would call family and friends seed round. Well, at that stage, anybody can invest in companies. And for us, we didn't have a lot of capital to deploy, and our communities as well, they don't have a lot of capital to deploy. So if you have $15,000, you're really taking a huge risk in putting your money into one company at a very early stage. Well, we took that risk, and we were able to bring some other people in on our opportunities as well that we were investing in. And what we've discovered was that these particular companies that we were in early, they happened to do well, and they gained traction. They started generating revenue, and then they got VC backed. And by that time, the company is de-risked now, because they have revenue, they have a product market fit, they have the venture capital network and resources behind them. And now it's a less risky time to invest in those companies. Well, what we discovered was, at that point, it was harder to get access to those deals. We couldn't get new investors in at that point. So we saw that as a problem and an opportunity. So with our network and the resources we had, we decided that we would form Urban Capital Network to make sure that we are able to get investors in at a later stage in a less risky asset and investment period, right? So we encourage first-time investors in this asset class, in this private placement startup asset class. Instead of putting maybe the only $15,000, $25,000 that you have into one company, get in at a little bit of a later stage, and you can have a portfolio of companies for that $25,000. Because as we all know, 9 out of 10 companies are not successful. So you really need to build a portfolio of companies. If you're able to put $25,000 a year into a different company, maybe that works. But if all you have is $25,000 to invest, then the better way to do it is to find a way where you can get access to a portfolio of companies with that investment. It de-risks your investment. And what's going to happen is the winners are going to compensate for some of the losers.
And what do you see for you? You talked about an accredited investor, and I'll have you define that for people who aren't familiar. And what do you do for people, if you do anything to help people become that, whether it be by earning net worth, whatever that is. But where did this start for you, Lenny, as Urban Capital Network and now what you guys have and what you guys are invested in, some of the deals you're able to participate in. Like, where did this start where you wanted to be an angel investor, where you wanted to get to, buying and selling of companies?
Well, I don't know if I ever had the ambition to be an angel investor. It wasn't something that I set out to do. Actually, it kind of just happened by accident because of the opportunity. Let me give you a little background on myself. So I started my career as an electrical engineer, and I worked as an engineer for about 8 to 10 years or so. And due to circumstances and situations, I just started transitioning further and further away from electrical engineering and more into like project management and even finance. And I always had an interest in entrepreneurship as well. Along the way, as I was transitioning further and further away from the technical side of things, I decided to go and get an MBA. And while I was getting my MBA, I developed an interest in mergers and acquisitions. And at that point, I thought that once I completed my MBA, that maybe I'll find a M&A position in corporate. And I tried to do that for a couple of years or so, just couldn't really find the right fit. And also, by that time in my career, I was in senior level management in corporate America. And then some of the opportunities were following a traditional path to M&A, which included starting out as an analyst. And, I just wasn't interested in doing that. And then what happened was I experienced 2 layoffs in 2 years. And it was my 4th layoff in my entire career. So, and each layoff always set me back. So with the electrical engineering degree and an MBA and all of these things, I still found myself getting laid off. I had no control over it. So at that point, I decided that I was going to take control over my own career. I had that interest in mergers and acquisitions, and I really wanted to do that. So what I did was I bought a business brokerage franchise. It helped me get started. It provided the infrastructure for me to start out in M&A. And around that same time, I got the opportunity to invest in a startup company. And what I realized in working with some of my the buy side clients in my M&A business and my business brokerage business, they were interested in buying businesses, but the more I talked to them, they really were more interested in investing in businesses. They were asking for businesses with absentee ownership. So they just wanted passive income.
Right.
So I connected the dots there and I said, you may be interested in investing in some of these startup opportunities that we're getting, right? So that kind of bridged the gap and complemented, what I was doing in my business brokerage with the investment side. And then I teamed up with my partners and we just blew up the investments that we were doing, and which later became Urban Capital Network. So now I still do both businesses. I still have clients that I work with who I help them maximize the value of their business upon exit. And I invest in startup companies. So I get exposure to the complete life cycle of a company from startup to exit. So, and it's a little bit different in both worlds, whereas in my business brokerage business, I am primarily working with Main Street to lower middle market companies, whereas in the startup space, these are really companies that are going to be high growth companies that will have an exit either through an IPO or some type of acquisition later down the road. But typically it's going to be the type of acquisition that requires or warrants an investment bank to manage the transaction process.
Yeah. Well, you speak to working in corporate America, bumping your head against the wall, not finding your way out, and then eventually, going to start your own thing. And sometimes we're being released from something because we're being called to something greater. So it's so beautiful to hear that story. And now transitioning, talking about you on the investment side, working with multiple different entrepreneurs from the merger acquisition standpoint. You said Main Street businesses, and now investing in startups. What do you think is the key thing that you see that gets an entrepreneur to go out and build something literally from scratch? Some of the entrepreneurs you're investing in, what are some of the key things you look for in an entrepreneur, in a business? Obviously product, market, probably the size. And we talk about TAM, total addressable market, but what are some of the key factors you look for when you're looking for an entrepreneur?
That's a great question. And, some common qualities usually arise to the top when you're evaluating an entrepreneur or a team. You're looking for that leadership ability, that grit, the hustle, the complete understanding of the space and market that they're going to enter as well. Really early stage investing, as you guys may know, a lot of people say this all the time as well. It sounds cliche, but it's really, really important. The quality of the team is key. That's probably the number one criteria. So there's more criteria, obviously, that you're going to evaluate when you're investing in a business, but the quality of the team is heavily weighted. Then you might look at the size of the market, and it's all very subjective as well. Each investor will have their own criteria and how they prioritize certain criteria and weight them. But the management team is really important. And as I mentioned, when you get to the point where you're starting to ask for money, you want to have proven that there's a market for it. You understand the market. You are intimately familiar with the market, and that you are the person who can execute it. Sometimes we meet great founders who have a great idea and they've gotten to a minimum viable product, but we don't think that they're the person to take it to market or take it to the next level, wherever it may be at that point. So you really have to have confidence in that founding team.
Yeah, I think, as you were talking, I was thinking about, I couldn't help but think, man, I wonder what, Urban Capital Network, when were you guys wrong? Like, do you have a story that you're like, hey, this entrepreneur, maybe it's not the entrepreneur, maybe it's the team or the market you didn't know, and you just said, hey, we're going to pass on this one, and then you watch it go off into space somewhere. Do you guys have a story like that?
Thank goodness we don't, but that doesn't mean we won't. So,
everyone eventually gets that. If you're investing long enough, hopefully you do experience it. Hopefully you don't, but it means you've been doing it long enough.
You took enough shots
to know you missed.
Right. Yeah. So we're just wrapping up our third year right now. So, in 3 years, it's hard for any company to really be what you would consider, very successful. And I'm sorry we missed out on it, or even failures. So as of right now, we don't have any failures either. There's just, so far in the 3 years we've been investing, our companies are all still out there. They're still in business. Now there's a few that we're like, we got to watch this one a little bit more. But again, I like the pivot. I like what the founders are doing to make sure that they do everything that they can to get over some of the growing pains and the hurdles that they're facing right now. This, in terms of overlooking someone or failures,
not yet.
Fortunately, we don't have. We've had more wins for sure.
That's good. That's great, man. I think one of the things as you were sharing with what your guys' plan is, you guys do offer something to a community that hasn't necessarily had that. Talk a little bit now about the accredited investor category. There's a lot of controversy around what it takes to be an accredited investor, and a lot of back and forth. Jeremiah and myself, we've had much dialogue around should there be a barrier of entry to protect people, or is that barrier of entry designed to keep people out, right? And is it a little bit of both? So talk to us a little bit about, because you guys are meeting people probably at the beginning or first generation of being an accredited investor and making these kind of investments. Talk to us a little bit about that.
Yeah, I agree with your assessment and some of the things that you guys have heard as well. So first of all, the definition of an accredited investor is someone who earns at least $200,000 of income annually, or if they're married, I think it's $300,000 if you're married, or also if you have $1 million of net worth, not including your primary resident. So that definition alone eliminates a lot of people. And I have mixed feelings about that. I think it definitely keeps a lot of people out from participating in one of the greatest wealth building investment asset classes out there. But the other argument is it's protecting people who maybe can't afford to take that level of risk, because it's a highly risky asset class. But the rewards compensate for the risk you're taking, if you get a successful investment. But if you compare that to the stock market and crypto, I don't know if those things are any less risky. Now, what the difference? I guess crypto is in a class by itself. But if you think about public markets, the only difference is if you're investing in the stock market, it's a public company, so there's information out there available for everyone. But my argument to that is, who really evaluates that and researches that information, and who knows how to get it? I mean, it's accessible, it's easily accessible, but you still have to know where it is, how to get it, and how to understand it. And it's a lot of documentation. So you have to be able to look at financial statements, the quarterly financial statements that they put out there. But a lot of people, especially in underserved, underrepresented communities that don't have that background, they don't have a financial planner or a broker that manages their money, they're going by hype, right? So they're going by the things that they hear about, they're familiar about. But most of the times, the best investments is in a company that you haven't heard of.
Yeah.
So, I don't know if the risks in public markets are any less, than some of the private companies that you may be able to invest in. I like to think that I know more about the private companies that we're investing in than what I have in the stock market, to be honest with you. And guess what? I'm losing more money in the stock market than I am in my private. Like, I'm on paper, our investments are appreciating by a lot, So, I mean, I probably can't talk about just due to regulations, but I can't talk about, how much that appreciation is. But I mean, our value in our investments are pretty high right now compared to my investments in the stock market. I'm down. So
yeah. And in the stock market, obviously most people aren't investing solely by themselves. They're giving their fund to a portfolio manager, a wealth manager who's making those bets for them, which is the same thing you do in the venture space, right? When you invest in a fund, right? You're giving someone that you trust, that has done the due diligence and knows how to go spot these deals. You may be able to have certain insights depending on the fund that you're in, but you're allowing them to go make those bets for you as what's happening in the public market. So it still doesn't shake all the way out. They've done some new things, obviously, with the crowdfunding act, where people can participate in that and kind of give people access to that. But usually sometimes those are, not always perceived as the best growth deals. But what you guys are doing is just fascinating. You talked about the who you are, what you do, why you do it, and kind of how you do it. Is there any particular company that you would want to highlight that you're really excited about? I know we talked about Mitch, what she's doing, being one of the top, like right over 100 Black women who's raised 1.5. I think that's what you shared about where she's at. Would you want to share someone on that?
Yeah, so I need to kind of complete the urban capital network model
Yep.
for you guys to understand how we ended up making an investment in Oya FemTech. And I'll tell you a little bit more about Oya as well. So we lead with investors. We're trying to make sure our investors get the best investment opportunities. And with that, we're investing alongside of VCs, as I mentioned, or in VC funds, um, and we're agnostic to the demographics of the founders that we're investing in. We're just trying to get the best returns for our investor network, which is primarily minorities. We don't exclude anyone, by the way. I mean, we have a lot of white males that are investors with us. Um, and what I tell people is that we may not have 100% of minority investors, but 100% of our investors don't have access otherwise. So we're still providing access to people who don't have access, because otherwise some of these folks wouldn't need to invest with us. Okay, so that's the front end. We're focused on giving our investors the best opportunities to participate in venture-backed quality deals. On the back end, we take a portion of our revenue and returns from participating in those deals, and we reinvest that exclusively into women and founders of color. And we educate, empower, and enable our investors to do the same if they are willing to reinvest some of their returns. So initially, we were making those impact investments just as a management company. Well, in Q4 last year, we completed a full cycle of our model that included our investors participating in those investments as well.
Wow.
We had 5 exits by that time. So in about 18 months, we had 5 exits. So we returned capital to our investors, and they expressed interest in participating in our impact investments. So we did our first impact investment fund. And we reduced our investment minimum for that fund to like even $5,000. And the reason we did that was because we were investing in companies that are not VC backed yet, although 1 or 2 of them ended up being VC backed. And they were just at an earlier stage, so pre-revenue, and we don't want our investors to overextend themselves. So that's why we reduced the investment minimum for that to $5,000. So back to Mitch and Oya FemTech, and Oya is OYA for anybody that's listening, Oya FemTech. I was a judge in the Rice Business Plan competition here in Houston, which is the largest business plan competition in the world with respect to how much money is awarded at the competition. So this previous year, 2022, I think they broke the $2 million mark. So wow. They gave out investment awards of over $2 million.
Wow. Last
year, it was all virtual in 2021. And that's where I saw Mitch pitch. Yeah, I know it sounds.
Yeah. But you go over that a lot. She has fun with that one.
Yes. So more than anything, man, I was impressed by her as the founder. So Oya FemTech, what they do is she has a patented pending technology for women's apparel, specifically leggings or athleisure wear. That helps promote and prevent as well. It's promotes vaginal health and prevents common vaginal related. I don't even know how to say it. Vaginal related
infections and
infections and different issues that women face from being active and working out. So. She is a former athlete herself, and she experienced those issues as an athlete. And she says it has to be something better out there. And there wasn't. So she decided to create it herself. And she has a legging now that has more ventilation, absorbs more moisture, and just helps protect women from some of the common issues that they face from being active. And she's extended that into sports bras and all of that as well. And she has a really good vision and plan to do more innovative things with fabric and things that can promote women's health as well. So I'm really excited about her. We were her first investor, and now she's well on her way to closing out her round. You mentioned it. So she's one of the few Black women to get to $1 million in capital raise, and she's poised to do great things, and she has some really big name investors behind her as well.
Yeah, that's awesome. And she, when I met her, she spoke so highly of you and your team, and just how much you believed in her and how much she believes in you guys, as you guys are doing something different in the industry, providing a creative way to bring, capital onto tables where there's a little bit of diversity on the back end where we can reap the benefits, but still, doing a good thing and putting capital into minority founders, women, and people of color's hands so they can go build things. So just amazing work what she's doing. And, we know that the founder can't do too much without the money, and the money can't do too much without the founders. You need that perfect marriage, and you guys are really doing a strategic thing and doing that. So really, really great with it. So what do you see that you're excited about in the future, with Urban Capital Network? What do you see the vision is with you and your team?
Yeah, so we really want to be the catalyst for economic stability and financial freedom in the minority communities. And we'd like to really expand our reach and our network so that more people can participate in what we're doing from the investor side and the entrepreneur side. We're looking to develop partnerships with folks, kind of like you guys, right, in other cities that may have access to people who are looking to invest. They may have access to deal flow, but they don't necessarily have the infrastructure. So we're looking to maybe do some partnerships with people in other cities. We have a pretty broad reach across many states, but we don't have a physical presence in all of those states. So we also want to expand the education programs that we do around investing and entrepreneurs as well. And then naturally, I think we're just progressing towards a more traditional fund. And what I mean by that is where we'll be raising our own fund to source our own deals and not necessarily depending on investing alongside of venture capital firms. So, we're getting to that point. We're progressing in that direction. And, who knows, maybe we'll announce something soon as well.
Yeah, no, that's great. And so the model is a bit unique, as you mentioned, and it's something that's I think is incredibly creative to get traditionally left behind people into a category that they just don't even feel invited, educated, empowered into that. And so you talked about deal flow. You talked about investing alongside venture capitalists. Your unique value proposition that you're bringing to an investor is that, or potential investor, is that you guys have great opportunities to invest in. Obviously, the success your portfolio's already had. What are some of the things that you attribute to the relationships that you've been able to build with these venture firms that, do you take all of their portfolios and say, hey, we want to invest in all of those? Or do you go build a relationship with the entrepreneur alongside? Like, talk to us a little bit about that kind of that two-way marketplace that you're building.
Yep. So, man, the beauty of our model and how we got started, I mean, it's almost like a hack, to be honest with you, how we were able to get started and get quality deal flow right off the bat. I can tell you this, man. So, and it's kind of like a sidebar, but when we first started, we were looking to raise $250,000 to be an LP in a fund. We ended up raising like $1.3 million out the gate. And this is taking small checks.
Yeah.
And then what happened from there was the fund that we were in, some of their portfolio companies were raising follow-on rounds. So meaning they're growing, right? They're growing. They need more money to fuel the growth. We're already indirectly invested in them through the fund, but now they're raising money where we had an opportunity to go direct. And it just so happened there were, maybe, I think about 8 companies. I can't remember exactly, 8 to 10 companies or so just happened to be raising around the same time. So we said we need to raise another fund to invest in these companies. And this was just 3 months later or so. And we did like another $1.3 or $4 million. And that's when we realized there's a market for what we're doing. So something's working. There's an appetite for it. People are interested. So that's kind of how our model kind of developed, where we were going into a fund and then getting access to direct deals on top of that. So part of it is with our relationships with the venture capital firms that we invest with or through or alongside, is that we have a value proposition for them as well. And we're bringing them diverse investors, LPs. We also introduce diverse talent. And so within our network, we have people who are looking for employment opportunities, advisory roles, either in a venture fund or in some of their portfolio companies. So we're able to offer diverse talent, and we're also able to introduce diverse deal flow to them as well. So part of why we come back around and reinvest some of our earnings into minority founders and women is we want to get them to the next level where they're attractive for a larger VC firm.
Yep.
So that's why I'm excited about someone like Mitch and Oya Femtech, because she's on her way there. She's really there now, right? So she doesn't need any money from the VCs now. That's what's great.
You get profitable, right?
Yeah. She doesn't need any money from the VCs. But as she grows, she will. But now she has the capital to get her to the next round. And what's going to happen next time? The VCs are going to be knocking on her door, right? Yeah. So and one more thing you mentioned about the relationships with the founders. So in addition to the value that the VCs see and their values have to align with what we're doing. And so all of our partners who give us allocations into their deals, their values align with ours, which is to diversify the cap table. Well, typically what we've seen is the founders that are in the portfolio of the venture capital firms, once they understand who we are and what we're doing, almost always they make sure that they give us room to get into their follow-on round. Almost always. Now, we might not always get a large allocation. So you just got to think about all of the deals we're going into, they're in high demand. So there's not a lot of room just to let a lot of people in. But usually they'll put something aside for us to be able to get in. And what happens at that point, we're cherry picking the cherry picked. So we're able to say, hey, we can invest in these companies, but not these. I mean, all of them are pretty successful, but we're limited by the amount of capital we have to deploy. I mean, we get a lot of quality deal flow, but we don't have the capital to be able to deploy. So, and that's another reason why we want to expand our investor network to make sure that the opportunity that we see, somebody can participate in it.
Yeah. And so you guys are finding yourself probably, like you said, at kind of growth rounds, whether that's A or B. So those rounds that are not as they're much more de-risked. They already have a product market fit. They're raising because of the momentum that they have. So you're not looking for, the distressed assets. You're looking for these ones that have significant momentum within someone's portfolio where they already intimately know the business, and that one is one of their winners, or one of the ones that have their upward trajectory. So it's like, hey, they just raised an A, they're already raising a B because of this, and you guys find yourself somewhere in there to where your investors have a promising opportunity, not a guarantee, but a promising opportunity at a favorable return.
Yes, definitely. Yeah, nothing is guaranteed, but I mean, we're getting into some really good quality deals, and the beauty about building a portfolio, and why we encourage someone who doesn't have a lot of capital to invest in a portfolio such as what we're building. I mean, you might find some opportunities in angel groups and things like that to do what we're doing, but the winners. And I mean, there's like you said, it's de-risk, and I think because of the portfolio we're building, I'd say the riskiest thing is that maybe you don't get it as much of a return as you hoped, but losing all your money, the probability is low. I mean, it can happen, but because we're getting in, when these companies are in growth phase and all those things, and they have a network behind them, they have resources behind them, it's just a better position to be in, from, starting investing in a company when they're just starting out.
Yeah, no, and so how involved do you find yourself with those founders in that portfolio? It sounds like the impact fund, you guys have a lot more involvement with those founders, and the other ones are a newer relationship where they have a huge network of advisors and board members and people like that. But do you guys find yourself involved with any of your portfolio founders? Given that your allocation is smaller.
Yep. Yeah, so you hit the nail on the head right there. Our allocation is smaller, so compared to some of the amounts these companies are raising, we're a small fish, so we don't have a lot of influence or even a whole lot of interaction with them. However, they do respect us. As I mentioned, we have diverse talent. So one of the things we've been doing is when they have job openings, we're able to send them some resumes to look at here and there. So, I mean, we do have access to them. We can email them, even get on a call with them, in most cases. But we don't have board seats or anything like that. So, the interaction is limited.
Yeah.
No,
Well,
go ahead.
No, I would look at it from having, the allocations you guys are able to bring. Obviously, you're bringing diverse money on the table, diverse talent, but also unique insights from potential consumers, depending on what products these people are building, what companies they are. If they're just SaaS, obviously they're probably not going directly to the end user, but any of these companies that have any end user with it, there's a diverse end user that they may get as well too. So getting insights from the investors, but also end users knowing that there's potentially some diversity on the cap table would make them more excited to potentially use that product, because we're becoming more educated in the marketplace now with a lot of consumers, and they want to know what they're buying from. They want to know what the company stands for. They want to know the company's mission. They want to know that diversity is something that means something to them. They want to know that other people are getting paid from this company beyond just the founders that look like the overrepresented counterparts that come from areas that don't look like them. So I think that's a unique part to talk to some of these founders about, like, hey, some of these investors, are going to come from communities that your products are eventually going to hit their table and hit their doorsteps. So letting people know that these companies are, providing that capital allocation for people of diverse backgrounds will make, consumers pretty more excited to use whatever gadget or app or platform that they're using on a day-to-day basis.
No, absolutely. So, back to the example with Mitch and Aya Femtech, she's worked with some OBGYNs to kind of help test her model. Well, we have a network of physicians that are our largest investor base. Like, I don't know how many, I mean, but we have just a lot of doctors that invest through us. So I was able to introduce Mitch to some of the doctors in our network as well, that she can work with, have test her product, give her some feedback and things like that. And we plan on doing more of that as well with Oya. So though that is an example of, you know, the network that we have and how it could help a founder as well.
That's great.
Huge.
Well, Lenny, we really appreciate you, you know, sharing your wisdom, your experience. But I think the one thing that we don't want to miss the opportunity to just give you your flowers, man. The work that you and your team are doing, acknowledging that we know firsthand it's not easy work. You didn't get in this because it was a get rich quick scheme. You saw an opportunity to serve your community and make people money. And, you know, capitalize on some opportunities that have traditionally not been afforded to us. And so just really wanted to thank you for the work that you're doing, the inspiration that you've been for Jeremiah and I. You know, while we have you captive here, we like to always make sure that, you know, if someone's an inspiration to us, we definitely appreciate that, man.
Oh, man, I appreciate it, guys. And let me tell you, you know, it's just a reflection of you guys. You know what I'm saying? So you guys are doing great things as well. So I appreciate that. I appreciate the opportunity of having me on. But I see you guys as equal and just a reflection. That's all.
Well, thank you, man. Thank
you.
Got
an urban X Factor connection here.
Yeah,
pretty soon. How to make this work.
That'll be something we talk offline about.
There you go.
Where can people find you? What's the best way to reach you? Whether that's website, LinkedIn, social media handles. Where's the best place for people to find you?
Yeah. So me personally, you can reach me at on LinkedIn, Lenny Saizan, Saizan. You'll find me there. If you're interested in finding out more information on Urban Capital Network, you can visit our website, which is just urbancapitalnetwork.com. And that's it. You know, if someone's out there, I know we talked mostly about Urban Capital Network and investments. If someone is out there interested in learning more about selling or buying a business, just hit me up on LinkedIn. I don't want to give out all of these different websites and confuse people, but yeah, if you're interested in that, you can hit me up on LinkedIn.
Wonderful, man. Well, Lenny, again, thank you for being on. Thank you to our listeners who joined us on this show. If you like this, go ahead and like it, subscribe, share, comment, leave us some feedback. For Lenny and the other guests that we've had, thank you again to our sponsors who make all of this possible. Appreciate you guys.